Thank you. Due to the Fed's aggressive interest rate hikes, mortgage rates have surpassed 7%, rising to 20-year highs, leaving many credit-worthy and mortgage-ready homebuyers without a path to home ownership. This is a problem for everyone. It's an urban issue, it's a suburban issue, it's a rural issue. Chairman Powell, I welcome the decision of the Fed to pause rates at the end of last year. But for families in my district and across the country, that is not enough. We need the Fed to start cutting because, like the rent, interest rates are too damn high. Chairman Powell, you've previously indicated that the Fed may cut rates this year. What would you expect the impact of lowering interest rates to be on the housing market specifically, including the rental, purchase, and construction market?
So we know that higher rates, of course, have slowed down the rate of activity. So if at such time as we start to lower interest rates, housing market will pick up broadly across new home construction and new home sales. The number, as you know, many households are in very low rate mortgages, and they really can't sell because they'd have to refinance into a high rate mortgage. That'll go away over time. So ideally, the housing market would go back into a more normal phase, but one with lower inflation in the broader economy.
Right. So just to further reiterate that, interest rate cuts would have a great benefit. Just yesterday, actually, I met with a number of representatives from state housing finance agencies from throughout the country, and they were talking about the barriers to affordable housing projects given the current interest rate environment. Obviously, higher interest rates have raised costs for affordable housing developers, and many of them have chosen to slow down or halt construction entirely. So fewer homes are being built, which means fewer people are being housed. So given that would you agree? So given that we already had a massive shortage of affordable housing supply prior to the pandemic, when interest rates were below 2%, the current rate, 5.5% rate, has been devastating. And the price of homes across the country have remained stubbornly high. It's clear that the current state of our housing market is impacting everyone and disproportionately hurting those who need stability the most. Does this concern you?
So our job is to do price stability and maximum employment. We don't target the housing market. And we're doing our jobs. That's what we're doing. It's not something we want to see, but
does this impact on the housing market? But does it concern you, Chairman Powell?
Does it concern me?
Yes. Fewer homes are being built, so fewer people are being housed.
This is the job we've taken on.
All right. Well, it concerns me greatly. Chairman Powell, the Fed's interest rate hikes have not been sufficient in addressing housing inflation. Do you agree that we need a more robust fiscal response to increase the supply of affordable housing and to lower costs nationwide?
So we don't take opinions. We don't express opinions on things like that. I will say that there is a structural housing shortage in the United States, and that's really the longer run problem. The problem with high interest rates is a short run problem. The longer run problem is lack of supply.
Well, that's why it is critical that Congress pass legislation and appropriation bills that will make those necessary investments in housing for all. Given the way that Ranking Member Waters fought for a $150 billion investment in housing and Build Back Better, I know on this side of the aisle that my colleagues and I are ready and waiting for the Republican majority to take housing inflation seriously. Housing affordability is the #1 issue I'm hearing about from my constituents. Families in my district and throughout this country need relief now. I truly hope the Fed will listen to them and cut interest rates. Thank you. I yield.
Gentlelady yields back. The gentleman from South Carolina, Mr. Norman, is recognized for 5 minutes.
Thank you, Chairman Powell. I think other people have noted about the crisis in the office building market across this country. That's a line of work we're in. I can tell you it's real. I can tell you the buildings that are effectively vacant, it's going to have an effect on the taxes paid. It's going to have an effect on rents. As far as affordability in housing, the rates are one thing, but my good friends on the other side of the aisle don't realize that housing has got over 200 components to it. One of the biggest is gas prices. And as long as we're buying gas from countries that hate America and don't manufacture our own, housing isn't coming down. I don't know how you define affordable anyway. It's going to continue a downward slide. And I'm from a state in South Carolina that people are moving in. And we're not going to have the housing starts that we should have because of the policies of the Biden administration, which is train wrecking this entire economy. On regulations, on Regulation 2, which is has the guardrails for credit card fees, how do you answer and I know the caps you're looking at adjusting that. How do you answer the charge that this is really should not be, you're getting in the way of banks charging fees according to what their costs are? How does the regulations affect that, particular Regulation 2?
Is this a Fed regulation we're talking about,
Yes,
or is this a CFPB regulation?
No, this is, for my record, it's the Federal Reserve has finalized the routing and restrictions and proposed tighter and adjusting the price caps that currently exist. Is that not right?
It doesn't ring a bell with me. It may well be right. I'm not familiar.
If you
with
could
that.
look at that, I know all the credit unions and banks have got some concerns on that.
I will come back to you on that.
Okay, I appreciate it. Do you need a letter from us? Or
No, we'll come back to you.
Okay, thank you. CRA, for those of us who have been involved with banking for a long time, the regulations having a clear set of standards that we abide by and know where to put the money to. When should we have regulations out that we can read about what's going to be acceptable and what's not?
Sorry, I didn't get your question.
The regulations on the changes in regulations for CRA.
Right. What about it? I'm sorry, I missed your question. What was
When are the regulations going to be out that we'll know, the banks will know what's acceptable for CRA and what's not acceptable?
So the final rule, of course, is out. I think we're working on. There's a lot of work to do. The requirements don't really kick in, most of them, for a couple of years at least. So I think we're working on the follow-up regulations.
Okay, that's real important for all the banks because they want to make sure they qualify, and where the dollars are spent, they need to make sure that it's going at the right spot because the credits won't be applied unless that's it. The Fed now, where the Federal, I think, Reserve launched and is operating this now, how is the participation rate going with that?
Slow, real slow. It's early days. There are network effects. These things they go slow until they don't. And it was the same way with ACH. You may remember back in the day.
Right.
So we're at fewer than 500 banks are in there now. We're working away at it. We expect it'll take some time, but it's there, and we think it'll be beneficial. We had a lot of support from smaller banks to build it, as you know.
Is the pricing below cost?
I don't believe so. No, not longer run cost.
Okay. Okay, that's all the questions I have. Thank you for being here.
Gentleman yields back. The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
I want to thank the chairman and the ranking member for this hearing, and to you, Chair Powell, for appearing before the committee to discuss the recently published monetary policy report. As we continue our work on behalf of the American people, we have to keep in mind that our mission here is to grow the economy from the bottom up and the middle out. It seems as if there has been a constant series of shocks to the economy, both domestically and globally, and yet we can all see just how resilient the labor market has been as it has maintained its strength. With a robust gain of 353,000 jobs, the January numbers are a continuation of the trend that Democrats in Congress delivered through historic investments in our workforce, putting people over politics. In light of this relative economic strength, I really want to implore the Federal Reserve to take stock of the holistic economic picture before making decisions on monetary policy, and to pay particular attention to those communities that have been historically left behind during times of accelerated recovery. I want to add to the questions from my colleague, Congresswoman Presley, Chair Powell. At a time where it has become increasingly difficult for working people and people of color in particular to purchase a home, I worry that rising mortgage rates will put working families even further behind on accessing the wealth and equity that a home provides. So what actions, if any, is the Federal Reserve considering to better understand and to mitigate the impacts that your Basel III proposal may have on minority borrowers who disproportionately rely on high LTV mortgages due to the generational wealth gap that persists?
We've received comments, including many, on the mortgage changes, and we understand the concerns, and we're looking very carefully at that. Haven't made any decisions, but we will announce them when we have.
Are you concerned that these shifts in risk weights will reinforce the decade-long retreat of banks from the mortgage market and push more originations to non-bank institutions?
That's a question that people are raising, and it's something we take very seriously, and we'll be taking that into consideration as we decide about that change, that recommended change.
Could you discuss why you feel it is necessary to include new requirements around operational risk in Basel III in light of recent claims that it will significantly increase the cost of or prevent banks from offering altogether necessary services such as underwriting, investment advisory, or insurance?
That is one of the concerns that's been articulated about the proposed changes to operating risk. We take those concerns seriously. As I mentioned, we're in the middle of looking at these things, and then we'll soon, in the process of turning to the question of what changes to make.
Well, I just would underscore the sense of urgency, because the longer there's uncertainty in the market, it creates really negative effects to end users, which are all of our constituents who are looking to see these costs come down. Let me shift. This Congress, under the leadership of Ranking Member Waters and former CBC Chair Joyce Beatty, I've made it a focus of my efforts to educate my colleagues and the public at large on the far-reaching benefits of increased diversity in the workplace, in our boardrooms, and in society as a whole. Despite the efforts by some on the other side to take away the very tools of economic opportunity that create inclusive work environments and improve performance, there has been a really misguided assault on everything from diversity, equity, and inclusion to other programs following the aftermath of the Supreme Court's ruling on affirmative action. So, Chairman Powell, as you know, your Office of Minority and Women Inclusion has a focus on this. So as we anticipate the upcoming release of your annual report on inclusion, would you be able to speak to the necessity of collecting this data that minority and women-owned businesses are included in the board's contracting and acquisition opportunities?
I do believe we collect that data, and we monitor that very carefully.
And why is it important?
Well, I think diversity in the workplace is an important thing, and you won't know how you're doing unless you measure it.
And just as the McKinsey Institute released in their Diversity Matters Even More report, companies that have more diverse management teams actually outperform companies that don't. That goes to the bottom line of our economy, and I wish my colleagues on the other side would stop their assault on diversity, equity, and inclusion and actually work with us to grow the economy.
Gentleman's time
for
to
everyone.
expire. The gentleman from Wisconsin, Mr. Stiles, now recognized for 5 minutes.
Thank you very much, Mr. Chair. Thank you for being here, Chairman Powell. Appreciate it. You're navigating a difficult situation where we've had stimulative economic policies from the Biden administration, in particular, excessive government spending, investment in infrastructure, specific tax credits. At the same time, we're seeing a regulatory environment from the administration that's also restricting economic growth. We've heard a lot about the Basel III endgame, which you have a chair of. In your opening remarks, you noted that high interest rates are impacting business investment in a negative way. High interest rates are also negatively impacting the housing market. As we look at Basel III endgame, I've heard from a wide array of stakeholders, from those that are commenting on increase in bank capital standards, the negative impact that that would have on the housing market, as well as from the business community, the impact that that would have on their ability to invest in capital infrastructure and increase employment. Does the broad diversity of voices who hold concerns on the Basel III endgame concern you?
I would say that I've articulated concerns, and we're reading those comments, and we're very much in the process of assessing what we need to do to address them.
Thank you. I appreciate your time on that. Shifting gears slightly, as you may know, the Securities and Exchange Commission held an open meeting today to approve the final climate change rule. It's a significant regulation that I think would have a significant impact on the economy. Can you comment how the Fed thinks about the economic impact of this new regulation or regulations more broadly, and in particular their impact on both inflation and on employment?
We don't comment on regulations of other agencies, sorry.
And you'll review that if it's put in place, or you'll review the economic impact as the empirical data comes forward?
We're not in the business of scoring, CBO does that. They'll look at this and make a careful assessment of the economic impacts and budgetary impacts and that kind of thing.
Thank you. I'll shift gears again. One of your two mandates is to maximize employment in addition to maintaining price stability. And as you know, government hiring has accounted for a large share of total job creation. More than 600,000 public sector jobs were created last year, and the federal government now employs nearly 3 million workers. So when you're examining employment data, how does the Fed view the impact of the public sector employment growth relative to private sector economic growth? In other words, how do the two data points factor into your assessment of how the broader economy is performing?
So the jobs are jobs, right? But I think we would tend to look at private sector jobs to get a better assessment. Private sector job creation is a better indicator of kind of the private sector momentum in the economy. But we look at both. They both count.
And does the dramatic increase in the private sector number of jobs give you any pause or concern as it relates to?
You mean in the public sector?
In the public sector. Sorry if I misspoke. Yes, the public sector.
The truth is the public sector was unable to hire at the beginning because wages went up a lot in the private sector at the beginning of the pandemic inflation, and public sector can't respond to that. So there's some catch-up hiring going on there now. Now that things are settling down to normal, I think there's some catch-up hiring. I'm not sure it's an issue we're concerned about.
Okay, I'll shift gears in my final minute just to talk a little bit to get your perspective on the macroeconomic developments that are having an impact on our monetary policy, specifically as we think about the potential for a productivity boom, from AI to work at home to other factors. The data is probably too early to tell whether or not we're having a true productivity view. But how does the Fed view the adoption of some of these new technologies, in particular AI, as it relates to labor productivity?
So everyone's looking at AI for that question, and it's hard to say, actually. We've had really nice productivity in the last year or so, but it's probably still very much affected by the post-pandemic factors that we're seeing. I think we need to see more to understand whether there is a longer-term boom. AI certainly has the capacity to either augment labor or to replace labor, and that's a key question. We really don't know which of the two it will do. Tons of money being invested in it, and so it's likely to drive significant productivity. I would say right now technology, but also higher labor mobility, a lot of people quitting during the really tight labor market, and also the rise in startups. There were a lot of people started companies during the pandemic. Those are the kind of things that do add up to higher productivity over time. So there is hope that we'll see some productivity out of this.
Thanks for your comments today, Mr. Chair. I yield back.
Gentleman yields back. We'll go to the last questioner of the day, the gentleman from New York, Mr. Torres, for 5 minutes.
Thank you, Mr. Chair. Mr. Chair, I have several questions about some of the most common complaints that I've heard about Basel III Endgame. I have an open mind on the subject, but I want to hear your response to some of the arguments that have been leveled against it. First, the Fed has repeatedly reassured the public that the banking system is well capitalized. Yet the Fed is advancing Basel III on the assumption that the banking system is undercapitalized. So the first question is, how do you reconcile the Fed's repeat assurances about a well-capitalized banking system with Basel III's assumption of an undercapitalized banking system? The second question, if the purpose of Basel III is to align U.S. banks with their banking peers elsewhere in the world, why is the Fed imposing requirements that are more stringent than those prescribed by Basel III? In other words, why is the Fed, quote unquote, gold plating? The third question is, how do you reconcile Basel III's recommendation for standardization with Congress's statutory requirement for tailoring? Standardization would seem to be in conflict or in tension with regulatory tailoring. And the fourth and final question, do you think that Basel III could have the unintended consequence of reinforcing the trend toward shadow banking, which would mean less regulation, not more? Is there a sense in which we are transferring risk from the regulated sector of the financial system to the deregulated sector? So I bombarded you with 4 questions, and I'll give you the time you need to answer them.
I'm going to have a hard time reading my handwriting here, but I'll start with yes to the 4th one. I'll give you that one because that is clearly a risk. We've seen intermediation activity moving out of the regulated system, and this has the risk of doing more of that. So what was, in a word or two, what was the one again?
Just you said, and you testified,
capital, yeah.
repeat reassurances about the capitalization of the bank.
So I addressed this in my remarks in the open board meeting. You know, higher capital is always going to add to safety and soundness, but there's a cost.
Right.
And so identifying the precise right level is very, very difficult. Hard to do it objectively. I've said for years in these rooms that I thought that the level of capital in the U.S. banking system was about right. So I posed, and I voted for all these increases during Dodd-Frank. So I think it's a very fair question. We'll be looking at that. The second one was
the concern about gold plating.
about
Gold plating?
oh, gold plating. Yeah, no, it is, and I said this in my public remarks that we're exceeding the minimums with this proposal, and we also exceeded what the other big jurisdictions are doing. And so that's a question. That's a good question. I'll agree.
Okay, great.
And the third?
And the third is, I think you more or less, and standardization versus tailoring.
Standardization of, it was something.
Yeah, so Congress passed a statute requiring regulatory tailoring.
No, that's an
And
excellent
do you think
question.
Basel III is in compliance with that
I addressed that in
statute?
my comments too. I think you're right. We do need to take on board the lessons of Silicon Valley Bank as it relates to the smaller, large banks, but we don't need to throw away the tailoring that's required by the law, but also that is appropriate if we're going to have a diverse banking system.
You know, the collapse of SVB was largely a story about liquidity risk and interest rate risk, yet the focal points of Basel III are credit risk, market rate risk, and operational risk. Like, what is your response to the criticism that the Fed should focus its energies on addressing the forms of risk that were responsible for the SVB bank failure rather than focus on forms of risk that were largely unrelated to it?
So I agree with that, but I would say we are working on a package of liquidity measures which directly addresses the Silicon Valley Bank situation. We've also taken a lot of supervisory actions with other medium and small sized banks that had a lot of uninsured deposits and a lot of real estate risk and things like that. So we've been doing quite a lot on the supervisory section that it doesn't require new rules.
And then finally, as you know, the crippling cost of housing accounts for a third of inflation. One of the most powerful tools for producing and preserving affordable housing is the low-income housing tax credit, which has financed nearly 4 million units of affordable housing. The banking system accounts for 85% of LIHTC investments, and there's a concern that Basel III, in its present form, would diminish the availability of LIHTC and the amount of affordable housing development. And so I'm just curious, is that on your radar, and is that something you're willing to examine?
Yes, it is.
So with that, I'll leave it at that. Thank you.
Gentleman yields back. That's the final questioning of the day. We committed to the chair that would be done with a hard stop by 1 p.m. It's nice when we can honor our commitments. So I'd like to thank Chair Powell for his testimony today. Without objection, all members will have 5 legislative days in which to submit additional written questions for the witness to the chair. The questions will be forwarded to the witness for his response. I ask you, Chair Powell, please respond as promptly as you possibly can. And with that, this hearing is adjourned.